Welcome back to Investing Talk Podcast. Today, we are taking a closer look at Destiny Tech 100. Now, this is that really unique vehicle that offers public market access to, well, a highly curated basket of private, high-growth tech unicorns.
Yeah, companies that are usually off limits to most investors until they IPO. Think SpaceX, OpenAI.
Yeah.
They're in there.
Exactly. So you could sort of call it a shortcut into that pre-IPO world.
And the big high-stakes question we're wrestling with today is this. Is Destiny Tech 100 actually a good time to buy right now? Before we get into the sources, just a quick reminder. If you find value in this discussion, please make sure you hit subscribe, like, and comment. It really helps us out.
And definitely leave a comment below if there's a specific company you want us to look into in a future conversation.
Okay, let's jump in.
Right. So it's really vital to frame this discussion properly because, Destiny Tech 100 operates unlike almost any other public company out there. The sources we pull together, we've got fundamental analysis, technical data, and importantly, quite a bit of speculative chatter, rumors.
Yeah. It gives us this perspective on a stock that's driven almost entirely by future expectations. Our mission today really is to understand why the market is paying such a premium for assets that, strictly speaking, aren't quite worth the stock price on paper yet.
Okay, so let's unpack that structural advantage first.
Yeah.
If the underlying assets are private, why would a public investor buy this instead of just, waiting for the IPO?
It really boils down to unique access. Destiny Tech 100 gives you that first-mover access to a portfolio of, I think it's 100 pre-IPO tech firms.
Right.
They're essentially acting as a proxy for a very sophisticated venture fund, but crucially, with daily liquidity. You can buy and sell it like a normal stock.
Okay, so that structure creates a kind of moat then.
Exactly. A significant moat against traditional ETFs or mutual funds, because those are legally barred from holding these often illiquid private assets in the same way.
And their recent performance seems to suggest that management is actually picking some winners in that private space.
Absolutely. The Q2 2025 financials, they showed really strong internal growth. Specifically, the net asset value, that's the estimated fair value of the holdings, the NAV.
Right, the NAV.
It increased to $6.92 per share.
Okay.
Now, that's a 9.7% jump, just quarter over quarter, from $6.31 back in Q1 2025.
Wow, 9.7% in a quarter. That's pretty solid.
It is. And that growth alone was enough to raise the fair value of their total holdings up to $76.8 million. It's basically confirmation that those underlying private market assets are appreciating pretty robustly.
Okay, so despite that foundational strength, the stock itself has been, well, a bit of a wild ride, hasn't it? We've seen really high volatility, especially through October trading this year.
Oh, yeah, that high volatility is basically the market grappling with this opportunity. The data seems contradictory. You've got the fear and greed index recently flagging fear at 39.
Bearish short term.
Right, reflecting that short-term anxiety. But then you look at technical analysts, and some are predicting up to, 55% upside by November?
65%.
Yeah, so it's this real battle between current investor nerves and these massive long-term expectations for growth.
And we should note, the fund management isn't just sitting on their hands. They're actively tweaking that portfolio, right?
That's right. The rebalancing back in August 2025 was pretty key. They shifted focus a bit to increase exposure to high-growth, medium-cap, and large-cap private companies.
So bigger bets.
Kind of signals management's high conviction, I think. They believe the largest asset growth is still ahead, and they're positioning the fund to get maximum uplift when those bigger companies eventually, pursue IPOs or other liquidity events.
Okay, so we've established the foundation, a growing NAV, around $7 a share, give or take.
$6.92, yeah.
But here's where the story gets really interesting, because like you said, the stock isn't trading anywhere near $7. It's way, way higher. Let's tackle that colossal valuation disconnect.
Yeah, this is the defining characteristic of this stock. The last verifiable NAV as of June 30th, 2025 was $6.92.
Okay, $6.92.
Now, compare that to the closing price just the other day, October 17th. It was $26.87.
$26.87, so like 4 times the NAV?
Roughly, yeah. We are talking about a massive premium the market is paying over the stated asset value.
And if that gap doesn't raise your eyebrows, the analyst consensus targets certainly will. What are they saying?
It almost defies gravity. The average analyst consensus price target for 2025-2026 is, wait for it, $157.54.
Get out. $157
Right.
from $26.
I know. That forecast implies an anticipated, what is it, 486% upside from the current trading price.
That's staggering. I mean, the market and analysts are expecting just continued aggressive asset growth. That would require like several huge IPOs from their portfolio,
Right.
right?
Multiple multi-billion-dollar successes. Yeah, that's what's baked into that target.
Okay, hold on though. A target of $157 against a current $6.92 NAV. Isn't that analyst target just completely divorced from reality? Especially when you consider that crucial data caveat in this company's reporting.
And that's exactly where we need to apply some critical thinking. This is the structural risk, right?
Okay.
Comprehensive JAP-based financials think revenue growth, net income figures for recent quarters like Q2 or Q3 2025, they're just not available from the standard SEC filings, the 10Qs or 10Ks, for Destiny Tech 100 itself,
Why not?
because its value relies almost entirely on the fair value of those underlying private holdings, and those are appraised internally by the fund's own management.
Ah, okay. So we, as public investors, aren't buying like a dollar's worth of liquid assets for every dollar we invest. We're essentially buying what? A cheap option on the success of these next wave tech giants.
Yes, that's a great way to put it.
If one of those unicorns, say, a huge AI company in their portfolio actually IPOs successfully, then boom, the NAV gap shrinks instantly and the stock price could explode to meet that new, now publicly validated value.
Precisely. You are paying that premium now because you believe in management's ability to pick those pre-IPO winners, and you believe the valuation they assign internally will eventually be realized and confirmed by the public market.
So that current price, around $26, it's essentially the market price for the potential future IPO value embedded in those illiquid assets.
Exactly right. It's a bet on the future crystallizing.
Which makes management's efforts on transparency absolutely critical, doesn't it? To mitigate investor concerns about that internal valuation process.
It absolutely does. By emphasizing a transparent valuation approach, they build credibility. And that's essential for their longer-term goal, which seems to be inclusion in larger indices or major technology ETFs.
Right, because that would unlock huge passive institutional buying.
Significant flows, yeah. That's potentially a very big deal down the line.
Okay, let's pivot then. Let's look at the charts and see how all this market sentiment is actually translating into the technical picture right now.
All right, so technically, the current price, $26.87. It's sitting right near its 50-day simple moving average, the SMA. That's at $27.15.
Okay, so hovering right around that 50-day line.
Yeah, and for technical traders, that 50-day often acts as immediate support. It suggests the short-term trend is, kind of intact for now.
But where's the major hurdle, like the level that really needs to break to confirm conviction for a bigger move?
That would be the 200-day SMA. It's sitting quite a bit higher, up at $37.71.
Ah, okay. So $37 is the big one.
Breaking $37 is seen as key to potentially unlocking that next phase of the expected run-up. And if you look at the 3-month forecast from some sources, the suggested range is between roughly $27.88 and $39.26.
39.
Yeah.
So potentially testing that 200-day resistance.
Exactly. The sources suggest there's a high probability of reaching that upper end if that major 200-day resistance breaks decisively.
Okay, what about the pace? The momentum behind any potential move?
Yeah.
What are the indicators telling us?
Well, the 14-day relative strength index, the RSI, it's pretty neutral right now, around 66.77.
Neutral. Okay, so not overbought.
Not overbought, no, which means there's still plenty of room, technically, for a sustained upside move without needing an immediate pullback just based on that indicator.
I feel a bud coming.
Well, the MESID, that's a trend-following momentum indicator, is showing a bit of a negative divergence short-term.
Meaning?
It signals that while the price has been sort of stable recently, the underlying momentum pressure might be slowing down just a little bit temporarily. So maybe advises a degree of short-term caution. Nothing alarming, but something to watch.
Okay, so momentum's a bit mixed, but the potential is obviously enormous if things break right. Now let's talk event catalysts. For a stock driven so much by expectations, what are the critical dates we need to have circled on our calendars in the next, say, 6 weeks?
Right. These are the events that could potentially re-rate the stock quickly. First up, October 24th, 2025.
Okay, what's happening then?
That's the Q3 2025 earnings announcement. This is critical because it should give us the next update on that NAV. Will it confirm sustained fair value growth, building on that strong Q2 number? That's what everyone will be watching.
Got it. NAV update. What's next?
Second, watch around October 30th, 2025. That's potentially an ETF rebalancing window.
Ah, the index inclusion possibility again.
Exactly. If Destiny Tech 100 happens to get included in even some minor ETFs during this window, it could drive significant new volume and, importantly, institutional buying pressure.
Okay, earnings and potential ETF flows. And you mentioned a third date.
Yeah, this one is more about tracking institutional conviction. November 25th, 2025.
What's its significance?
That's the institutional portfolio disclosure filing deadline, the 13F filings.
When the big money managers have to show their hands.
Precisely. We'll see if major institutions, the pension funds, the big asset managers, have been quietly building positions in Destiny Tech 100 during Q3. If they have, that would be a very powerful signal to the rest of the market.
Okay, so 3 key dates to watch. But beyond those verifiable calendar items, we absolutely cannot ignore the rumor mill, right?
Yeah.
Speculation seems to drive this stock almost as much as confirmed NAV growth. What's the chatter right now?
Oh, the rumors are definitely potent here. First, there's persistent market chatter suggesting that at least one major unicorn within their portfolio is actively preparing for a formal IPO or maybe a significant secondary liquidity event soon.
Which would instantly crystallize value.
Exactly. It forces that NAV to jump dramatically and very visibly. That's huge.
Okay, what else?
Second, that speculation about ETF inclusion we mentioned, it isn't just about potential buying volume.
What else does it signify?
Well, the rumor that it could be evaluated for inclusion in a major technology ETF suggests a broader acceptance is potentially building for this kind of unique investment vehicle. It implies the market might be maturing and starting to trust the fund's internal valuation process more.
Interesting. And the third rumor probably involves retail traders.
You guessed it. We can't ignore the noise. There is persistent speculation about a potential retail trading surge, maybe driven by social media attention. You know, a classic meme trader rally.
Which could trigger a rapid, maybe short-lived, but potentially parabolic price spike.
Could happen. It's definitely part of the speculative landscape for this stock.
Okay, so this high reward potential obviously comes with a necessary discussion of high risk. When we try to balance the optimism, what are the absolutely essential risk factors that you, the listener, must keep front of mind?
Number one is the illiquidity of those underlying private company holdings. That's paramount. If the private market suddenly turns sour or if sentiment shifts, it's very difficult for the fund to sell those assets quickly without taking a big hit.
Right, they can't just dump SpaceX shares on the open market tomorrow.
Not easily, no. Then there's also the constant threat of high volatility concerning that NAV discount or, in this case, premium. The stock price, trading at, 300, 400% above NAV, can swing wildly, sometimes quite independently of the actual underlying asset performance in the short term.
And because the portfolio is so laser-focused on technology, the concentration risk is always present too.
Right.
If the whole tech sector takes a nosedive.
Absolutely, that's a big one. And furthermore, we just have to re-emphasize that foundational data risk. Key balance sheet data for Destiny Tech 100 itself. Things like debt or its own liquidity, it's just not independently verifiable from recent public filings in the standard way.
So you're really taking a leap of faith based on the fund's internal reporting and their forward-looking guidance.
To a significant degree, yes. You have to be comfortable with that ambiguity.
Okay, wow. We've covered the unique structure, that massive valuation gap that really defines the stock, the technical setup, the catalysts, the rumors, and importantly, the inherent risks. So it's time for the final synthesis. Based on all the source material, the fundamentals, the technicals, the catalysts, the risks, what's the overall assessment here?
Okay, pulling it all together. Destiny Tech 100 receives an overall bullish rating of 9 out of 10. A 9. Wow. Okay, hang on. Given the non-verifiable balance sheet data you just mentioned, the extreme concentration risk in tech, and the fact that it's trading at 4 times its liquidation value, doesn't a 9 out of 10 feel, dangerously high? What justifies such overwhelming optimism?
It's a fair question, and the rating is high, reflecting high potential reward alongside that high risk. The rating is based primarily on the expectation of realized future asset growth, not just the current static value.
Okay.
The rationale really rests on 3 pillars. First, that substantial, confirmed quarter-over-quarter NAV growth we saw in Q2 that shows the engine is working. Second, it's a highly differentiated first-mover product. It's structurally unique, giving access others can't.
Right.
And third, those strong and frankly credible analyst price targets, while sky-high, they reflect a robust forecasted performance based on the quality of the underlying portfolio. The market is betting heavily, yes, that the risk premium paid today will be dramatically eclipsed by the asset realization tomorrow. So the investment thesis itself is strong enough to warrant that high rating, provided the investor fully understands They are taking on what amounts to venture capital level risk in a publicly traded wrapper.
That's the crucial caveat. Understand the risk profile.
So for that 910 thesis, what about the investment horizon? Is this more of a quick trade opportunity, or is it really a long-term structural play?
Interestingly, it seems attractive for both approaches. You could approach this as a shorter-term trade, trying to leverage those Q4 2025 event catalysts, the earnings, the filing deadlines, potential ETF news, hoping for rapid price moves.
Okay.
Alternatively, it serves as a potentially powerful long-term investment if you truly believe in the structural growth story, the long-term asset appreciation potential, and the fund's sustained leadership in providing public access to private tech.
Right, a bet on the whole category they're creating.
Right.
Okay, that brings us to our final provocative thought for you, the listener, to consider today. Given this massive discrepancy we've discussed between the current trading price, the established NAV, and those nearly 500% upside analyst targets, is buying Destiny Tech 100 right now essentially like buying a relatively cheap option on the success of the next wave of pre-IPO tech giants?
And maybe consider this too. If potential institutional index inclusion does happen down the road, what does that signal about the broader investment world's growing willingness to accept these kinds of internal, arguably less transparent, non-GAAP valuations for unique, high-growth investment vehicles like this one?
Food for thought. Thank you for tuning in to Investing Talk Podcast. We'll catch you next time.